Namaste, good morning, and welcome to this classroom. Actually, after 20 months, a physical classroom as well as an online classroom. So, those who are attending online, I have sent the material by WhatsApp. I'll give you all the instructions very soon. And whenever you have a query, don't hesitate to just ask me. Your voice is audible to me, and for the physical students I will take care. And I also tell you that when the hybrid batch is framed in such a manner that suppose on a particular day those who are attending online want to attend an in-person class also, they can definitely come. Well, before going into it, the overall instructions are: one, with regard to all your workings and all your material, I'll create the folder today, the drive today. You will find there all the material and all the workings. Number two, the physical, the book material, just give me another week's time and just reframing the whole material so that it becomes more student friendly. Till that time, I will just post the material on whoever coming physically for classes. I will just provide the material to you. And then the third instruction is, this is not a fast track batch. This is a regular batch. But only thing is we are having the class daily between 6 a.m. and 9:30 a.m. is the class. The biggest advantage is in a span of 45 to 50 days, we will be able to complete. My intention is to complete it on November 30th, but maximum give me time till December 5th, not beyond that. We will be ensuring to complete before that, but it is not a fast track back. Whatever we take for 3.5 months, we are taking it daily. That's the only difference. And the in between this period, there will be 5 days in which we will not be having classes. Totally 5 days. One is October 25th, not the coming Monday, the subsequent Monday. There will not be a class. Diwali, the day before, and the Diwali date. And two other dates I will tell you as the class goes by end of November. So these are all the 5 days. But the way I think I can compensate and complete before November 30th is on Sundays. If we can have an extended class, we will be able to complete. But I'm not going to go overboard and complete it. Let us enjoy the subject, learn the subject, and complete it. You will not believe me till we end the classes, and I again tell you that amongst the scoring subjects, this is the easiest. This is the easiest. This is not as projected that it is a very voluminous subject. It is not as we are very clear where from the questions are going to be picked. We are very clear. Okay, I can to a larger extent we can not, it does not require any prediction, etc. It just requires that you need to track how the questions are being asked. So those type of questions are only going to repeat, and those who are going to write the May, we are very clear about what are all the amendments that are going to be questioned, be it May or November. The 9B that is going to be questioned, the new amendment of introducing 9B about firms, etc. So we are very clear to an extent that where from the questions are going to be picked. Well, as always, the classrooms will also be supported by a revision session that will happen somewhere in January, February for students who are writing in May, and in the month of July, August for students who are writing in next November. So that again will be in the same hybrid format, physical as well as live online classes. So just relax and enjoy the subject as of now. As the class goes by, I will keep on giving you instruction. Be sure whatever is there in our study material will be covered 100%. Chapter wise also it will be covered. At the end of it, if you can see, you will be able to appreciate. Today our focus is to get introduced with the subject again from a broader perspective of law, and to understand how to compute this taxation for individuals, especially with the surcharges, especially with the differential surcharges for dividend, for STCG, etc. We just need to understand how to compute the overall taxation. So today our intention is that. Parallelly, what I am going to do is, as and when classes are getting over, I am also going to prepare what is the solution material. So apart from the Excels that we are going to use in the classroom, I will also provide you a solution material probably by December 15th, completing all the chapters, so that you will have everything that is required to take you to the examination. So, without wasting much of our time, I am progressing directly to understanding the law. Okay. Can you bring her a copy also? So we know the purpose of income tax law. This is, you cannot expect this law to be larger favoring to the assessee. This is mostly a revenue seeking law. This is a revenue seeking law. Okay. If you understand the intention, you will understand why various provisions are. See, the whole law is framed in such a manner that every provision, every placement has a reason. If you have to just understand how the lawmakers have framed this law. What are all the things that went into them before framing this particular law? If you want to understand on a broader scale, if the lawmakers want to provide as a percentage of an asset value, deduction as a percentage of asset value, it will fall under section 32. It will fall under section 32. For example, you would have seen depreciation. There was an S2I investment allowance. 15% of the cost of asset can be claimed. There was before that an investment allowance exclusively for large scale companies. All those things will form under section 32. So if the lawmakers, if the finance minister wants to provide as a percentage of asset, they will ensure that it falls under section 32. If they want to give the asset itself as deduction, they will make it fall under section 35. If you look at section 35, now you will understand, if you recollect, scientific research expenditure, where except the land, all other things you can claim the asset itself as deduction. Specified business, where you can claim the asset itself as deduction. Agricultural extension program, skill development program. So every section has something unique. Only thing, we need to travel into that lawmaker's idea to understand. Not only here, all through the law, if you travel well, you will understand Why? Because you will always wonder, why can't they introduce a new section? Why it is going 35 AD, AC, CCC, CD? It will keep on going. Take 80G for example. How many 80G? If the intention is donation, any type of donation, they will make it fall under 80G. So political party, scientific research association, it will fall there. If you want to give interest asset deduction, 80E. That's why you see E for education, EE for house property, EEA for house property constructed between 1419 to 22, EEB for electrical vehicles, all the interest. So every section, if you look at the perspective, if you look at from the lawmaker's perspective, if something has to fall, they will find the perfect basket to which it will fall. And in that basket, they will ensure that particular provisions are. That's why you see a lot of provisions get added up with 80EEB. If tomorrow they want to give another interest, 80EEC has to be introduced. You will always wonder why they are not bringing a new thing. No, they cannot bring in because that is the way the law has been formed, and that is the way the law has to be understood. So if you look at it, you will very clearly specify, or you will very clearly see why a particular section is falling under, or why that section number, why, and what are all the reason it comes under a particular chapter. So we all know that our income tax law is divided into number of chapters. We all know that it is every chapter has a purpose. Chapter or guidance, more of guidance to you. Every chapter has a purpose, and as the class goes by, we will come to those crucial questions. Okay. So we all know that this is a revenue seeking law, and this law also serves as a motivational exercise. We will see in that. Okay, this is the reason for interpretation of statutes. Of course, you would read this in your law paper much elaborately, but this is the reason, Lord Denning's judgment, which gave the reason for interpretation of statutes. If Act of Parliaments were drafted with a divine presence and perfect clarity, then fine, you don't need an interpretation. But nowhere it is possible. We all know in the absence of office, when a defect appears, a judge cannot simply fold his hands and blame the draftsman. A judge should not alter the material, but should iron out the creases, which means that this is where the whole interpretation of statutes come. This is Lord Denning's wordings, because of which we have, before entering into law, we need to see some of the major interpretations, or some of the interpretations which will be useful for you. Interpretations are divided into two. One, within the law. Two, outside the law. There are some interpretation which is very much within the law. We call it as internal aids. We call it as internal aid. There are some interpretation which is away from income tax law or apart from income tax law. We take it from some other places, which we call it as external aid. The first internal aid, the most important, is marginal nodes. Have you seen marginal nodes? Have you seen marginal nodes? Okay. Have you seen marginal nodes? Okay. I assure you, all of you have seen marginal nodes. All of you have seen marginal. If you take a law, if you take an act and study, there is something written after drawing a line under that. Okay, that is known as marginal notes. That line is known as margin. So if you read a section, there will be a line, under that there will be some interpretations. So that line is known as margin, and under that whatever comes is known as notes. So all of you have studied. Without studying marginal nodes, it is very difficult to understand law. What is marginal node? Marginal node says how the section has evolved. What was the previous words? Something like Hayden's law. Okay. What was the previous words that the section used? When did the amendment take place? What is the new? Okay. So whenever you read something, on the top of it, you see a small number. And for that, you go down and see that when you go down and see, whatever you are seeing is known as marginal nodes. Okay. Which is very much part of law. Unless that is there, you will not be able to understand how the law has evolved or how new things have come into. And then we all know that the preamble of law is very important. It tells you every section has preamble. If you think that only an act has preamble, no. Almost major sections have preamble. One preamble I will give you, which today might look the intention of the lawmaker with a good preamble. How we are using it today, I can give you a small example. Okay, revise the returns. The preamble of revise the return is where assessee identifies any error or omission, he should be given an option to correct such error or omission. The preamble reads, okay, to err is human. So we should give an opportunity to correct. Today you are not using that section for that purpose. Okay, I can even say we are not using that section for that purpose. We know how we are how much we are taking shelter in that particular provision, just to ensure that within due dates we file our returns and later make. But the original intention of the provision is wherever there is an error or omission that needs to be rectified. So this section came. So like that, if you ask me, for every section there is a preamble. Okay, the preamble will tell you why that section or what is the intention of the lawmaker in having such a section. Whenever we read law, not only income tax law, whatever I am speaking about, there are two things: a superior section, a subordinate section. A section which will have overriding effect, section which might be a subordinate of another section. What is the words that superior section will use when I want to override? Notwithstanding. Whenever the word notwithstanding is there, it means it is a superior section. TDS default provisions, 43B statutory payments provision, notwithstanding anything contained under section 30 to 37. So it overrides. In 36, I tell you that you can claim employer contribution to provident fund as a deduction, bonus or commission to employees as a deduction. I tell you, I give you that particular right. But then in 43B, I tell you that these can be claimed as deduction only if it has been paid within the due date of filing returns. So, what has been allowed earlier, now if I want to disallow, I should have a section which overrides that particular section. So, all over you will find a superior section which will have overriding phrases like notwithstanding anything contained. On the other hand, how do you say something is a subordinate section? What words? the wordings that section uses is subject to. If they use the word subject to, so if you go and see section 36 today, bonus or commission is allowed as deduction subject to 43B. Employer contribution is allowed as deduction subject to 43B. So, whenever the law uses the word subject to, it is a subordinate provision, which means it can be overridden. And whenever the word notwithstanding is used, it is a superior section, it overrides. Notwithstanding can have a very, very, very bigger dynamic impact. When I say why bigger dynamic impact, I mean that when we use notwithstanding 30 to 37, these 7 sections, it overrides. Notwithstanding whatever mentioned in section 28 to 44, you will see this in computation of book profits, everything. Okay, you will see that. That means it overrides a chapter. Notwithstanding anything contained under this law, which means it overrides the whole law. If you ask for an example, normally previous year and assessment year are successive years. The income earning year is known as the previous year. The year that follows is known as the assessment year. But there are cases where we have seen that the assessment year and previous year will be the same. One of the example is non-resident shipping business, section 172, where we say a ship belonging to a non-resident, if it visits any of the Indian port and they take goods and passengers for which they charge and take money, I will allow the ship to go out of the Indian port only if income is computed and taxes are paid. 7.5% of the gross receipts will be computed and asked to be paid. This is the overall law. This section overrides the whole of it, notwithstanding anything contained under income tax law. The section will override. When we look into non-resident taxation, I will come back to this section, where you will understand this section, how two sections we will be comparing. There is a section under 44BB which speaks about non-resident shipping business, 172 which speaks about non-resident shipping business. Why these two sections? What is the difference these two sections make? Okay, like that, the word notwithstanding is of so much importance in our law. You will see these words very often repeated, very often, almost daily. Once in the classroom we will see this word. So much often it will be repeated. For example, number presumptive taxation provisions, 44AD provisions is full of notwithstanding clause. I don't want to go by normal computation. I will just declare 8%, 6%, 50% as my income. You will see that as notwithstanding clause. Okay, so these are internal aids. Then comes the external aids, that which I take away from the income tax law and apply it within the income tax law. External aids. 90% of the time, the definitions are within the Income Tax Act itself. Suppose Income Tax Act has not given a definition for a particular terminology, then I will use dictionary. That is an external aid. Another source of external aid is what we call popularly as finance minister's speech. That will give an impression of what the finance minister intended to provide us. Probably when we read the law, we are not very clear. But when we look into the finance minister's speech, okay, if at all that is clear, we can take it. Okay. Okay, if at all that is clear, we can take that also into one of the things. Relying on other statutes, especially GST, especially sale of goods law. Majority of all laws across our country rely upon Indian contract law for various purposes. So we will be looking into. So whenever we read of interpretation, internal aid, the best internal aid is marginal nodes. We will see in the classroom how sections have changed, what words they have used. The second best internal aid is the notwithstanding and subject to clauses. External aid, majority of the time we will see dictionary meanings, etc. Okay, so that is what you have been looking into as internal aid and external aids, okay, within our law. Okay, I go to rules of interpretation. Rules of interpretation. The first rule is literal construction. If something can be understood straight away, if something can be understood straight away, give that meaning to that. Don't try to interpret for the sake of interpretation. Section 192 is one unique section. In what manner? In the manner, okay, the whole online classes have ensured me that I don't stop with question, I continue to answer also. Okay, online class, the பெரிய problem is stop with the question, the other side, at least here I see reactions. Okay, தெரியாதுன்னா அந்த நாங்க வேணா ஆஃப் பண்ணிட்டு போயிடுறோம் அப்படின்ற மாதிரி இருப்பாங்க. Okay, I just understood that. Okay, immediately after question we should answer that. Okay, those are all the learnings of my online classes. Okay, so first, section 194, majority of 194 business related section has this words called either at the time of payment or credit, whichever is earlier. Okay, on at the time of payment or credit. So if advance is paid, etc. Whereas section 192 is only at the time of payment. நீங்க ஆபீஸ்ல you would not pass an entry for bonus as bonus to TDS payable to bonus payable. Bonus to bonus payable தான். All other provisions 31st March you will pass the TDS entry also, but for bonus you would not have passed. Leave alone the provisional or the actuarial valuation, etc. Even if you are actually paying it, you will not pass, because salary has this unique 192 has this unique provision that it is deductible only when it is actually paid. The terminology payable, mercantile system la you are not reducing the taxes. In one of the cases, City Group, not now, it was a very, very old case. Okay. In that case, the whole question was, is that words missed out? When whole of 194 has that particular terminology, in 192, they missed out that words. There also, it is deductible on accrual basis only and not just on payment basis. That is the assessing officer's argument. But the law, the code took literal construction. When you can read the law and understand, the wordings is very clear. Paid when it is paid. When there is a literal construction, there is no question of anything else. Okay? We will soon means in 5-6 clauses, we will soon see a case law, Palm gas, where again I will use this literal construction. All our case laws will be covered in our material. All our case laws will be covered in our material. For example, so if you look at this particular case law, okay, very interestingly, it is something to do with literal construction. Okay, assessee is engaged in purchase and sale of cylinders. Transportation is made through key contractors. Freight payments were made to such transport operators which are tax deductible under 194C. However, assessee did not deduct specifying the tax is deductible only if the amount is payable and not when it is paid. Okay, literal construction, not when you are following the mercantile system, payable. When you are paying on cash system, paid. Trust me, I will prove you in the classroom throughout. 95% of the case laws, you will answer it in the classroom itself. The judgment, without showing the judgment, if I ask you, you will be able to answer. But it would have gone up to Supreme Court. It would have gone up to Supreme Court. இது வந்து ஒரு கேஸ், இது வந்து it has gone up to Supreme Court, if you can believe it. That is okay, is it deductible? Okay, and Supreme Court has to clarify, no, the word irrespective of your method of accounting, this is deductible, not only here. Okay, so all case laws, I'm just showing to ensure that all case laws will be covered like this in our classroom. You can be rest assured that the case laws will also be part of your material. Your notebook, apart from small notes whichever we are taking, will be only for your practical working. As far as possible, all theories are covered, and whatever marking you want, you can make it in the material, which I will give it to you next week. The next is reasonable construction. Okay, again, extension of literal construction when you can understand it in the normal parlance. When you can understand it in the normal parlance, please go with the normal parlance. Do not try to, the whole intention is, don't try to keep on interpreting every single word which is not correct. Rule of mischief, which we all know. Okay, where a statute is amended for some specific purpose, the regard needs to be set for the specified purpose. What it was before, what was the mischief, what amendment took place? After long time, one clarity, which as people we all understand, but after long time, one clarity came in Finance Act 2021 in the mischief rule. Employer contribution to Provident Fund. You can deposit or you can pay it before the due date of filing under section 139, okay, September, October, or such extended time, and claim the deduction. Employees' contribution to Provident Fund. Employees' contribution to Provident Fund. Actually, there was lack of, there was clarity, but we were trying to interpret. What was the interpretation? Why the interpretation? Originally, what I am saying is some 15 years back. So it took that time to clarity. Okay. Both employee and employer contribution will be allowed as deduction only if the amount is paid within the due date of the respective law. PF law, ESI law. All other statutory payments, bonus, interest, leave encashment, any taxes, duty, all other statutory payment within the due date specified under income tax law. They amended saying for employer contribution also, it is as per due date under the income tax law. This is the amendment. The amendment was very clear. It is for employer contribution. The amendment did not speak about employees' contribution. Because employees' contribution, how employees' contribution, just though we are going to look into it more detailed, okay. When we come to that particular provision, okay. This is the law. Employees' contribution has to be paid within the due date under the specified law. Where it is not paid within the due date, it will be treated as income. Sir, it is not your money. You have to understand. Salary account debit to salary payable. The whole salary you took it as expenditure. Part of the salary you paid to the employee. Remaining part of the salary you either have to deduct as to the government or provident fund, etc. So this is the law, sir. If it is not paid within the due date, it will be treated as income. Section 2, subsection 24. Okay. Where it is not paid within the due date, then it should be treated as income. Subsequent payment, you cannot claim it as deduction. We will come to this section. Employer contribution, they amended that you can pay it within the due date under income tax law, section 139. When they amended it, they were very clear that amendment is only for employer contribution. But people started interpreting. No. Finance Minister missed to state. Najima, employees contribution. At that time, it was not electronic system. So, PF department was not accepting separately employees contribution, separately employer contribution, or they are unable to split. So, they all argue. Almost every month there will be a High Court judgment. One judgment favoring the assessee. No, it goes for employer and employee. Another judgment favoring the revenue. Only for employer contribution, employee contribution, this provision will not work. Budget after budget, we were waiting for the finance minister to give clarity. But for a clarity which we all know, honestly, okay, okay, in a room of chartered accountants, we'll be honest. Okay, we'll live in club. Okay, so budget after budget, we know that this is the provision. But in Finance Act 20, at last the clarity came. Okay, in Finance Act 20, the clarity came, and whenever there is in the material will be two-way to you. Okay, one is a material which will be traditionally with you in the book format. Okay, so consider the institute on the overall basis that will be really in a print manner you see, but the material that will be there in the drive and that will be there will be colorful. Okay, so whenever the color is blue, it is full of amendments. Okay, whatever is written in blue will be in amendments in that particular material, because majority of you, I think, have moved from a physical study to electronic study. So if you are comfortable, you can use that material. Otherwise, it will also be there in the physical format. Both these materials will be there. So here you can see the amendment. Okay, yes, 3615A. Deduction is allowed if the contribution is made or approved before the due date as per the respective statute for employees' contribution. Okay, and it has been the finance minister in the speech for removal of doubt. It is hereby clarified that the provision of section 43B will not be applicable and never deemed to have been applied. Okay, not only not prospective. Okay, we are having a wonderful system of taxation that the first day the finance minister will promise that I am very clear, no more retrospective amendment. Okay, and next day itself and never deemed to have been applied for the purpose of determining due date. Okay, so the finance, so இது வந்து mischief rule ஓட best example. This is okay, what it was. There was no actually, the lawmakers were clear at that time. They only extended it for employer contribution. Because of the practical difficulty where we faced, we were unable to split between employer and employee contribution. And we started interpreting that no, the finance minister forgot that there is one more. Why should the finance minister forget? The finance minister was very clear at that time that they only meant for employer contribution. After 15 years, the clarity came. Sir, it takes 15 years to give clarity. I will prove you sections where still the clarity is not there. As the class goes by, we will always wonder why they cannot give a small clarity for this, especially when we come to this capital gains Manjula Jesha case. We are going to work out two answers every question. Every question, because it is not a Supreme Court judgment, it is a High Court judgment. But practically, we have started following that particular, because that is beneficial to us. We have started following it. CA Institute has not yet given applicability. They make it as per law and write a note saying that as per Manjula Jesha. So CA Institute doesn't want to commit. We do both. Let both be there. So as a student, what happens? We get, and this judgment is not now. It is long pending. The finance minister has to just clarify, no, this is only applicable. The law is superior. The law stands as it is. Or we apply the Manjula Jesha case. Well, let us wait. So mischief rule is one such thing. Then comes harmonious construction. When a particular provision is said in various places, when a particular provision is said in various places, we need to give effect to it in toto. Okay. The best example is this 1010D. which tells life insurance premium is exempt from the maturity value is exempt, provided the premium does not exceed 10% of policy value or 20% of policy value, as the case may be. If it exceeds, it becomes taxable. If it becomes taxable, 194 DA is applicable, where tax has to be deducted at source. The same thing can be related to 80C. 80C gives us deduction for 10% or 20%, as the case may be. If it exceeds, that excess I will not give. So all these things are harmonious construction. A provision set in various places can be related and as far as possible should be construed harmoniously. This is the only case where we are looking at beneficial construction. If there is a small room of discomfort or non-clarity, that interpretation which is more beneficial to the assessee should only prevail. Okay, assessee favorable only, the law can be read. If there is lack of clarity, if there is clarity, that is different. If there is lack of clarity, it can only be assessee. So whichever is, when there are two views possible, that which is more favorable to the assessee can only be taken. Ejustum generis, that are those general words has to be interpreted with the preceding words. Okay, the lower level example which we always study is lion, tiger, elephant, and if I put etc. there, it means that we are meaning wild animals. We cannot call cat or dog immediately filled in etc. One example in our income tax law as of now is Section 2, subsection 22, clause E. Any idea? Deemed dividend. Any loan or advance given by a closely held company in which public are not substantially interested to a substantial interest holder for the hands of the substantial interest holder, it will be taken as dividend. The law uses the term any loan or advance. What is this advance? It is a generic term. So, ejustin generis clause, advance that take the character of loan, not trade advance. Okay, sundry debtors creditors relationship, they paid some advance, that is not coming here. Advance that take the character of loan. When we say any loan or advance, here means advance which take the character of loan will only be considered. So ejustim generis, when we go to that section, I will talk more about that and the case laws, ambassador tours and travels, no famous case law, where we will study that also. So these are rules of interpretation, more about it in your law papers, etc. Okay, and some words gets lot of importance in income tax law. This deemed is a very, very important word. Okay, in our income tax law, deemed, which means supposed to be. Any deemed you remember? Yeah, deemed ownership in house property. Asset, because ownership is always on the basis of title deeds. Asset purchased in the name of spouse, funded by the other person, assessee, repayment by the assessee, but registration in the name of spouse. I will, okay, what is popularly known as lifting or piercing of the corporate veil. I will not look into the document here. The real owner is assessee. So he becomes the deemed owner. Business or profession law, section 41 will speak about deemed income. Normally, if you sell a capital, deemed income oda best bad debts recovered. Deemed business income, supposed to be business income. Normally, if you sell a capital asset, it will be treated as capital gains only. But in some cases, it will come under business or profession. In some cases, it will come under business or profession. So it will be treated as deemed income. Supposed to be business income. Okay. I'll hold this for a case called Ranbaxy and versus R. They are interchangeable in our law. In many of the places, they are interchangeably used. In Ranbaxy case, there was tremendous clarity on this, which will come in assessment procedure. I will tell you. This is very popular. You all know shall versus may. Shall means wherever the law uses the word shall, it is mandatory. Just now you saw, okay. If the funds before the due date as referred in the respective, and for the removal of doubts, it is hereby clarified that the provision 40 shall not apply. Okay, which means it okay, it is mandatory. Whenever the word may is used, it is obligatory. Okay, so my dear friends, these are some of the rules of interpretation. We don't have a direct question on rules of interpretation. Okay, just some case laws will refer to some rules of interpretation. Otherwise, the direct question is only in your company law or the other laws paper, not a direct question here. Well, before progressing, I'll tell you now how our classroom progress is going to be for the next few days. Today, the introduction, followed by that, we are going to go to PGBP chapter. Okay, mostly from tomorrow, we will start with PGBP chapter. PGBP, capital gains, IFOS, assessment of firms, AOP BOI, assessment of companies, assessment of charitable trust. This is the first level travel. Travel 1, which we will cover all these things. Then we will go for assessment of individuals. There we will study salary and house property. As an examination itself, there are only lesser marks for that in terms of marking. So there we will study salary and house property. House property is a continuous thing. Sometimes in assessment of firm, we will see house property. Assessment of company salaries, we will see it along with assessment of individuals, where we will see salaries, deductions that are applicable for individuals. After completing this, we will go to assessment procedure. Starting from filing of returns, we will travel. Then up to appeals and revisions, we will be over with. Then we will take up TDS advance tax. Okay, TDS, TCS advance tax, which is a sure short area of question, which is we can very easily crack it. Two way it will work. One, the theoretical knowledge which we will comprehensively get, and the little practical knowledge you have, together it will be. And then the third part of the class will be international taxation. We are all very clear. I am 100% confident. Out of the 30, our target is somewhere between 20 and 25. Out of the 30 marks in international taxation, our target is something between 20 and 25, which is very much possible. Which is very much possible, not difficult. So the remaining 70, okay, even if it gives us 40, we are through with the exemption. We are through with an, I'm not talking about just exemption, but that will give you a comfort for all other subjects. Okay. If at all any of you have opted for international taxation in that selective paper, but I think economic law is the most fantasy or most easiest, I believe, because there is only one book and there is only okay. So the questions become simpler. But if at all you have chosen, our international taxation will cover that also. You need not worry. But from the first, what I want to tell you is the 70 marks is the larger area, is a very larger area, but we can very easily predict why interpretation of statutes is not a question under income tax law. So you are given only 70 marks for direct taxation. And in that, they will not waste their time with regard to interpretation of statutes, etc. They have so much of things to question. They will not waste on salary and house property when they have some 115 JB, 115 JC and all to be questioned. As far as possible, they will try to club those things and question you than to question on salary or house property. But that doesn't mean we will completely cover that also. Okay. And majority of you being from our inter-classroom, you might still have the notes with you. Okay. Right. So that can also be useful in a manner. But don't worry about salary on house property. It will be covered not as a separate area when we do assessment of individuals. So our coverage will start from PGBP and progress forward. Okay. Right. How many sections in income tax law? Ms. Sriram. Okay. You have been daily seeing that act. Almost daily seeing that act. Okay. Okay. I wish you don't become finance minister. Okay. Okay. Right. I'll tell you how many, all those things we will study. But income tax is divided chapter wise. Okay. How many chapter income covers? How many chapter for income? Okay. We are all very clear, right? There are 5 chapters of income, which is wrong. Okay. Okay. Right. ஏன்னா உங்களுக்கு நல்லா தெரியும் ஒண்ணு. Chapter 6A is deductions. அதுக்கு முன்னாடி set of clubbing, residential status, exemption, definitions, introduction, okay. 5 heads of income doesn't mean 5 chapters of income. 5 heads of income, not 5 chapters of income. What is a chapter? Items of similar nature will be put in that and covered. Trust me, whole of income is one chapter. So that chapter gets us a lot of mark. Chapter 4 is income. Chapter 5 clubbing. Chapter 6 set of 6A deductions. Okay. So a chapter is not something which is for heads of income and chapter of income. all section 16, it starts with salaries and goes up to section 58, which is deductions for other sources. All these things are one chapter. Sometimes only one section will be one chapter because there is not a similar thing to be grouped. Sale of immovable property, 269 UA. They will not be grouped because similar thing will not be there. So it will not be clubbed. Okay. Actually, our income tax law has 298 sections. Our income tax law has 298 sections. Okay. And divided into almost 37 chapters. Divided into 37 chapters, followed by sections will be schedules. Okay, rules, interpretation, schedules, depreciation rate. Okay, all these things are schedules. And then the whole law is divided into various parts. You all understand it. The law does not have the normal rates of taxation. Okay, I'm not talking about 115 BAC here. Generally, what is a charging section? Okay, I'll stick to my rule. I'll answer. Okay, right? That means you are disregarding all other section as non-important. No. In income tax law, section 4 is a charging section. Section 4 says you are taxable as per Finance Act. Apart from that, charging section no, it is still there. Okay, one line which will travel through your life from now on. Wherever rates are part of the section, it is a charging section. Wherever rates are, except section 4, which says go to Finance Act. Otherwise, wherever rates are part of the section, it becomes a charging section. Section 112 LTCG is taxable at 20%. It is not in Finance Act, income tax law. Section 111A STCG, on which security transaction tax is paid, is taxable at 15%. Part of income tax law. One thing which you are all knowing, 115 JB. Okay, book profit, 15% of book profit for companies. Charging section. Lottery income or winnings is taxable at 30%, 115 BB. Charging section. So, wherever rate is part of the section, that becomes a charging section, apart from section 4. Section 4, it asks us to refer to Finance Act. Apart from that, there is charging. So, income tax law also has charging sections in it. In few days, we will see. If I start with the word according to section 115, you can close your eyes and say he is speaking about a charging section. If I start with the word 115, 115 is the lengthiest of the sections. 115A, it talks about non-resident taxation. For them, this royalty and all is taxable at 10%. And it goes to 115 TD, exit tax for charitable trust. Shipping business, tonnage tax. So if I say 115, you can close your eyes and say that I am talking about the charging section. So wherever rate is inherent in the section, then it becomes a charging section. Okay, right? Otherwise, rates are there in the Finance Act, which is divided into various aspects. Okay, I told you every law, every aspect has a preamble, and that preamble today might look different, but the intention was very nice. Parliament time is precious. Okay, when they wrote the preamble, Parliament time is precious. So we should not waste the Parliament for simple things, because Parliament should decide major things that affect the nation as a whole. So came what is popularly known as subordinate legislation. Small things. ஒரு example எடுத்துங்க. If income tax act has all this forms, filing forms. If you want to add one more box, Parliament should be in session. Get the approval of the Parliament or make it and then go for the approval. So came subordinate legislation. Give it to a separate body. The whole of our GST law is subordinate legislation. Okay. So came Central Board of Direct Taxes. CBDT, Central Board of Direct Taxes, which is the major subordinate body. For that, section 295, section 119, two sections, section 295 and the section 119 of the income tax law gave power to CBDT to make rules, to make, okay. So we all know that these rules, income tax rules, okay, are made by CBDT, wherein you will find all, it supports the law. We have seen, you have been on day-to-day basis seeing a chartered accountant certificate has to be obtained. What should be the content of the certificate? You will refer to the rules only. Okay. Forms needs to be filed. What should be filed? You will refer to the rules only. So rules support the law as much as articles support the memorandum of association. Then comes circulars and notifications. Circular, purely internal. If CBDT wants to communicate with the departmental people, they will issue circular. If CBDT wants to communicate to you and me, they will issue notification. Are you understanding? Circulars are purely internal documents, whereas notifications are for open. Okay, it is applicable both for assessee as well as the department. But remember, my dear friends, that assessee can take a benefit of a circular. Assessee can go and tell the assessing officer, boss, there is a circular, you have to pass on the benefit to me. The circular's benefit. Okay, circulars are not binding on appellate authority or on the assessee. Appellate authority are also outside the department. However, assessee has the right to claim the benefit or insist on benefit being passed on to him. That is, he can ask the assessing officer, there is a circular, you are supposed to abide by it. Assessing officer cannot now say, no, circulars are only for us, you are not liable. Assessee can seek that there is a circular, please pass on the benefit to us. Yeah, open. Circulars are open. Yeah, you can see day-to-day circulars are open. Judicial pronouncement. A judgment given by Supreme Court is as if it is written in law unless the lawmakers overrule it, which happens every budget. What is the recent, okay, again, I assure you I'll answer. Okay, Finance Act, okay, Finance Act 2021, sir, one amendment which overruled some 10 judgments. No depreciation for goodwill. From Finance Act, okay, from your examination. So, sure short question. No depreciation for goodwill, because there were case laws like Smith Securities, Ravindra Kumar Arora, Ariva T&D, okay. Okay. All these case laws are gone out of it. We are not yet clear whether the institute is going to retain. That's why I have put it. Okay. Since the law is amended specifying goodwill is not eligible, the validity of this case laws might not be there because the new material of the institute is not yet out. These case laws were there in the old material, so I have maintained it. Material one we'll strike off these if it is not going to be carried. But these are some of the judgments which are overruled by one amendment. I'm just saying this is two case laws which are, but there are at least 10 to 15 case laws in the recent time which were all taken out because of that. Okay. So Supreme Court judgment can be overruled only by the lawmakers. Otherwise, whatever Supreme Court says becomes a judgment. Okay. And then what about the validity of others? High Court judgment is valid for that jurisdiction. Okay. High Court judgment is valid for that jurisdiction. We will see case laws on that. ITAT judgment is only for that particular. It goes on smaller and smaller. Okay. And Commissioner appeals. When we go to faceless assessment, we will talk about it. But these are all the things. And as I told you, this is the charging section under income tax law, where it says that taxes will be levied at the rates prescribed in the Finance Act. Okay. Because of these words only, it becomes a charging section. Because of these words only, it becomes a charging section. That is, taxes will be levied at the rates prescribed by the Finance Act. Okay, so this is a charging section. Before going further, let us understand couple of definitions and then go and understand the definitions in respective sections. One of the sections which we all know. Who is an assessee? Who is an assessee? Are you an assessee, friend? Not yet. Why? Okay. You are not liable to pay tax, so you are not an assessee. Okay. Assessee means a person by whom any tax or any other sum of money is payable under this act. Assessee. She says she is not an assessee because she says no tax is due from me. So I am not an assessee. Okay. Any tax, any other sum of money. No? Yeah. Sometimes tax is not payable, but some interest, penalty, okay, fines. I think to a larger extent, our income tax law says only if tax is payable, interest is computed, penalty is computed. Penalty cannot exceed the tax amount. So, அப்புறம் எப்படி அது பெனால்டின்ற? Okay. 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 Which is not correct. Okay. அதுக்கு tax the undisclosed income code. I hope my friends who are attending online is able to listen to their also, and I wish that you also participate.
If money is deducted and
Yeah, thank you.
not paying,
That is the
TDS.
thing I want to come. Here, they are speaking about something very important. I have deducted tax but not remitted into government account. She is not an assessee because no money is due to from her. Let's take that she is doing business. Her income is less than 250, but she has paid salaries on which tax has been deducted but not remitted into government. Any tax or any other sum of money is payable under this act. So TDS, deducted but not remitted. You might not be an assessee because you are not liable for paying income tax, but you are becoming an assessee because you are liable to pay TDS. ஒரு immovable property we are selling more than 50 lakhs. We have deducted tax at source. We need to remit it. Okay? So, otherwise, we will be deemed to be an assessee. And includes, so though. We'll speak about it. I got your point. Both in section 40 and in TDS chapter, I'll speak about. In that case also, you will be liable to pay interest. But I will tell you how it is being calculated, all the thing. I got your point. Okay. Though the wording started with assessee means, we are very clear. None of the section, they will close it. Okay. None of the section. Sale of goods lalia, sale means they'll start and then use the word includes. Okay, right? And includes every person in respect of whom any proceeding under this act has been taken. A notice has been sent to you. You become an assessee. Sir, I am not yet earned income, etc. Sir, a proceeding has been initiated. Under this law, you become an assessee. Okay? I'm repeating that again. Any proceeding under this act has been taken for the assessment of his income, that person's income, or the income of any other person in respect of which he is assessable. Okay? For the assessment of your income or for the assessment of any other person's income which you are responsible. What are we speaking about? Clubbing. Okay, are you clear? We are speaking about clubbing, which is wrong. Okay, we are not speaking about clubbing here. Clubbing is your income. Okay.
Representatives.
That's good. Representative assessing. Agent of non-resident. Agent of non-resident. Okay, I'll give you one other example. Mr. X dies. Nama lawla, okay, after the death of a person, the representative, okay, the legal representative is liable for the taxes of the deceased person. Okay, the suicide பண்ணிக்கிறவங்களுக்குலாம் முதல்ல income tax law சொல்லி கொடுத்துடணும். They will not commit. Okay, because they think once they are over, it's everything is over. No, they are putting the surviving people under much more problem than what they. Our law is so interesting in 160 to 180. What happens if the death happens during the course of the year, after the end of the year, before filing of return, after filing of return? Okay, கருட புராணமும் இன்கம் டாக்ஸ் லாவும் தான் இவ்வளவு டீடைல்டா டெத்த பத்தி எழுதியிருக்காங்க. Okay, right? So represent income of another person in respect of which he is assessable. Partners, after dissolution of a firm, there only this comes. Partners are jointly and severally liable. That partner is liable. After dissolution of the firm, the partner becomes liable. Okay, so that is what income of a representative associate, as our friend was saying, or the loss sustained by any other person, or even if you have a refund due, you are an assessee. You know, this is where it comes to. Suppose tomorrow, if our finance minister says that on the stipend you are paying to the article student, tax has to be deducted at source, you all will become assessing. Because when you want to claim refund, okay, stipend claim பண்றதே பெரிய விஷயமா இருக்கு, but when you want to claim refund, you become an assessee. Okay, right? So the terminology assessee is so huge. Even if refund is due, I am not liable for any tax. My income is less than 250 only. I am not liable for any TDS to be deducted. I am not a representative assessee, but still my banker has deducted tax for me on the interest that he paid me. I have to file my return to claim that refund, so I become an assessee. Okay, so that option is not there in income tax law now. You cannot forego that. Okay, you might feel that income tax act is only beneficiary if you forego, but income tax law now comes and tells you pay fine under 234F. You'll say, sir, that money I don't want, but this money they want. Okay, so that is every person who is supposed to be an assessee. Okay, again comes back to representative assessee's provision. When we read non-resident taxation, I'll tell you, and assessee in default. Okay, 201, where they say tax not deducted, TCS not collected, all these things. So the terminology assessee is much larger, almost covers the whole gambit. Almost covers the whole gambit. Assessment is what an assessing officer does. Okay, assessment is a process by which he verifies about your income and their tax. Okay, we are very familiar about this definition. Okay, all these people are taxable here. Individual, Hindu undivided family, company, firm, which includes LLP, AOP, BOI, whether it is you incorporate it or not, it is taxable. Government organizations and all trust societies, everything falls under this artificial juristic person. Okay, let's not now go into income as a definition because we are going to see income only totally. But if you understand on a broader scale, if you ask me, what is income? If you understand on a broader scale, what is income? Income means money coming from an external source. Income means money coming from an external source. One person cannot earn from himself. Salary to proprietor. Never a concept under income tax law. Payer, proprietor. Receiver. Not possible. Interest on capital of firm allowed. Enough firm, partners, two different persons. Income, interest on capital to proprietor. Not possible. Money should come from an external source. Okay? You are all having something, you are all majority or some of you are living in gated community, residential associations. Monthly you are contributing something for maintenance. 500,000 you are all contributing. They collect it, spend it for common purposes. Security, upkeep of various facilities, etc. For them, for that association, is it income? The answer is no. The answer is no. You know, this is income earned from yourself. We call them as, the technical name we give them is mutual association. Now coming to what is mutual association? Collecting from members, spending for themselves, whatever surplus is there is given back or supposed to be given back. Not even they should give back. It is available only for members. Once more, what is mutual association? Sir, you are going in the roads now. Today, you see auto stand, lorry, also many entities celebrating the Ayuja Puja together. Collecting from members, spending for their purpose, returning back the surplus. This is not an income because money is earned from. Why this association? Every month you cannot tell the people, the residents, 3 rupees paid to the security, 7 rupees paid to the garden, 9 rupees paid. So they have it as a common pool of collection, spend it, and then disperse. So the concept by itself is collecting from members, spending. This should be there. Contributories, beneficiaries are the same. Then it is not income, mutual association. In the apartment, the rooftop, they have allowed Airtel to put a tower and collect rent for the tower. Is this taxable? Yes, because collection is not from a member. Collection and, okay, okay, what is a mutual concern? Okay, that is the contributory and beneficiaries are the same, then it becomes a mutual concern. Okay? But if the contributory is somebody else, then that income is taxable. Tiruchirappalli Bus Owners Association ஒரு கேஸ் இருக்கு. Okay? I collected from all the bus, okay? They spend it for common purpose, etc. They had a small surplus left. They gave it as donation to PMNRF. Income tax department taxed it, saying, "Boss, you have not given the benefit. Prime Minister is not part of your association." No, bus stand. Okay. So, that money became taxable, sir. Contributories and beneficiary. Okay. Now, if I ask you a question, you will immediately say the answer. Is CA Institute a mutual association? No. Contributories are members and students. Beneficiaries are never. Okay. So, where the contributory, okay, later when we are going to study cooperative societies, trade unions taxation, these provisions will be applicable. இதுலயே ஒரு extension வந்து recent timeல ஒரு Supreme Court judgment. It went up to Supreme Court. I'll tell you the case. So I am an apartment. The ground floor is let out to State Bank. Bangalore club, no famous case. Let out to State Bank. They paid monthly subscription of 1,000 as like other members. Is this taxable? Is this 1,000 taxable? They paid 1,000 as a member subscription. Is it taxable? No. Contributed.
No.
Okay. That is for the benefit of all. So every member contributed every month 10 lakhs. They deposited it in that State Bank and earned interest. Is this interest taxable? Yes. Because this money, even though coming from a member, is not coming in the capacity of a contributor, but coming in the capacity of you are a depositor. Just because he is a contributor, ipo various on the Supreme Court judgment la, okay, there were a lot of aspects which they covered, okay, which we will see in that association and trade and professional and similar association. Gym used by the members, fine. The hall, the clubhouse used by the members, no problem. They can get the money, nada. But used by an external person. Okay. So the Bangalore club case law is one of the case laws where there were a lot of pronouncement by Supreme Court. Even sometimes it is coming from a contributory member, but it will not take the character of subscription or mutuality, interest, any other facility they are using, etc. Okay. You see all the clubs around, that is the aspect. So mutuality is not at all an income. For mutuality, the two conditions are contributory and beneficiary should be the same. Not that the profit should be distributed, but the profit is only available for the members. Anytime the profit is available only for members, rest of it we will see it. So that is income. More about income, we are going to always see about income only in this. Okay. And India is defined as like any other law within the territorial waters. Okay. It will include continental shelf, etc. The word manufacture is important because some of the deductions and benefits are only provided for manufacturing entities. Okay, additional depreciation, skill development, APIA are all provided for manufacturing. Change in from raw material to finished product is known as manufacture. Okay, and that is what is the normal definition which our excise or GST law has. Two things which come from Finance Act 2018, 19, etc. I want you to understand is what is acceptable modes of payment and non-acceptable. 40A3, okay, cash or other, okay, where 10,000 or no more is paid otherwise than by, okay, right? Not only 40A3, now so many sections are there covering them. So I have condensed everything. Okay, what is acceptable modes of payment? Okay, these 11 are acceptable modes: account payee check, account payee draft, ECS, credit card, debit card, net banking, IMPS, UPI, RTGS, all these things are acceptable modes. Instead of remembering acceptable modes, what is non-acceptable, if you remember, it is simple. Three things: cash, bearer check, cross the check. Remember, they have only used the terminology account payee check. A cross the check and account payee check are different அப்படின்றது ஒரு Supreme Court judgment only made me also clear. I also left in choice NI Act when I studied Inter. Okay, so uh, it seems a cross the check can be endorsed to another person. I get a cross check, I can give it to you. I can endorse it. Whereas an account payee check cannot be endorsed. Okay, so this, if you remember, what is unacceptable modes of payment are cash, the 10,000 plus, or in gift provisions we are going to see, or in section 35 AD we are going to see. Cash, bearer check, cross the check are unacceptable modes of payment. We all know that the Finance Act 2020 has changed the due dates, split it into two. For audit, still the due date is 30th September. Leave this year, but generally I am telling you, okay, if for audit the due date is 30th September, whereas for filing of returns, the due date is 31st October. Okay, 1 month before the date of filing of returns. Audit has to be completed 1 month prior to the date of due date of filing of returns. So this becomes important when we study 40A, the TDS provision, 43B everywhere. This is a most needed amendment also, because exactly on 30th September, if they pay the money, there is a problem because auditor was unable to give certificate. Okay, that auditor who will verify this and give certificate. Okay, not for us. Okay, so for them, this provision has been brought around and made the change. Okay, so these are some preliminary concepts which are very important for you to understand. Okay, some definitions and some concepts which will make you to understand the law better as we keep progressing. And then comes mutual concern. We all know this aspect of previous year and assessment year being the same. Normally, previous year first, followed by that will be assessment year. In some cases, previous year and assessment year will be the same. We will study this in parts. All these things are only known as representative taxation. Okay, these will fall under representative taxation also. Okay, right? We start back. As I told you, the for all of us sitting in this classroom, The previous year is going to be 21-22 and assessment year 22-23. We are going to read the Finance Act 21. I think one of our friend, one of you should be, or one of you who is attending here, they said that they will write the December examination after attending this class. Okay. So otherwise, I am practically looking at Finance Act 21 as our major act. Okay. Uh, with regard to the present finance minister, I will never say amendments are over. Okay. She is very active after putting the budget. Okay. So every time there is an amendment law, whatever amendments that are over till our classroom gets over, we will cover it in the classroom. Others, we will cover it up in the revision. Okay. Cases where EY and AY will not be the same, will be the same. That is, it will not be 2 different years or non-resident shipping business. This we will see later. Okay. Persons leaving India for the intention of permanently settling outside India, we ask them to pay the tax and leave the country. Okay. Where any joint ventures are over and I am unable to find out the right persons, I will tax them also. Okay, immediately, right? And discontinuance of business is optional to be taxed. Leave this part. Okay, not very important. But majority of us have to understand that the previous year of unexplained sources, or the year in which I identified, okay, today I find a bank credit. Today I find an expenditure you are making. You claim, no, no, every year for the past 20 years, I have been earning 1 lakh. So I spent it 20 lakhs. But I will not take it like that in the year in which you are spending, in the year in which you are investing. I will take that year as the previous year for these type of sources. Okay. Again, this will be again explained. Unexplained sources will be explained in 2-3 areas by us. Okay, including assessment procedures. We will be speaking about this particular part again. Okay. As of now, I have given it as an introductory because previous year for them is not the previous year in which you are disclosing, the previous year in which it is identified. But we will look into it in the respective chapters. Okay, and you all know that these are taxable at a very high rate of 60 plus 25, coming under 115 BBE. Whenever we say 115, we are speaking about a charging section. So this is also charging. Okay. With this small introduction, we walk into rates of taxation for individuals. Rates of taxation applicable for individuals. I need to tell you that the basic exemption, I'm not covering 115 BAC here, that we will see in assessment of individuals. The general basic exemption limit depends upon whether the person is a senior citizen or super senior citizen. Okay. In the case of senior citizen, 3 lakhs. Super senior citizen, 5 lakhs. For all others, 2,50,000. The 3 slabs are 5%, 20%, 30%. Okay. Please go through from page number 15 just once, just a recollection. So the basic exemption limit, okay, is 3 lakhs for a resident senior citizen. Remember, it is resident. For a non-resident, even though they are senior citizen or super senior citizen, it continues to be 250. Okay. Basic exemption limit to 5 lakhs. Okay. Is 5%. Okay. Is 5% for the second category. Super senior citizen will not come. Okay. 5 lakh 1 or 5 lakh 2, 10 lakhs. Okay. It is going to be 20% in all the cases, and more than 10 lakhs, whatever is the amount exceeding 10 lakhs, it is going to be 30%. Okay. Okay. This is said in Finance Act. We call this as normal rates of taxation or slab rates of taxation, whatever name we give. Okay. This is said in Finance Act. Okay. The purpose is, I think I missed the word resident here. Can you please write the word resident? Okay. It is only for resident senior citizen and resident super senior citizens the extra benefit are. In the case of LLP and firms, right from rupee 1, 30% is the taxation. Right from rupee 1, again, normal rates of taxation. Okay. And in the case of companies, it depends on their turnover for the financial year 1920. For the financial year 1920, if the turnover has not exceeded 400 crores, 25%. Where it exceeds, it is 30%. Don't worry about foreign company and all. We'll see it in assessment of companies. Now, these are special rates of taxation, which is part of income tax law. Okay. Section 111A, which speaks about STCG on sale of shares on which STT is paid, security transaction tax is paid 15%. LTCG on sale of shares on which STT is paid, first to 1 lakh not taxable. Okay, the exemption stays for first to 1 lakh, amount exceeding 1 lakh 10%. Amount exceeding 1 lakh 10%. Okay. Amount exceeding 1 lakh 10%. Okay. Within bracket, though I have written it later also. Within bracket, please write and keep no rebate under 87A. If you have 112A income alone, you cannot claim a rebate. No rebate under 112A. Later also I have written that. Okay. Just a marking. No rebate under 112A. All other STCG 20%. Winnings 30%. All other LTC, sorry. All other LTCG 20%. Winnings 30%. Okay. The present government has made the tax rates easier to remember by making surcharge so very complicated. The surcharge rates are so difficult to remember. I'm very honest to you. How many rates of surcharge, if you wonder, you will, okay, you will, for individuals, for companies, foreign companies, firms, that 115 BBE special rate surcharge, exit tax code surcharge, buyback of shares code surcharge. So the surcharge rates are more than tax rates. Number of line items is more than that. Now, today's classroom, I'm only going into individuals because for all others, it is easy to compute. When we go into the PGBP, sometimes we work out the individual taxation also. So, my surcharges for the individuals. Total income more than 50 lakhs, less than 1 crore, 10%, more than 1 crore, less than 2 crores, 15%, simple. These two are very simple. Then slowly, total income, excluding dividend income, okay, income taxable under 111A and 112A, STCG on which STT is paid, LTCG on which STT is paid is more than 3 crores, less than 5 crores. I am repeating, more than 2 crores, less than 5 crores. I am repeating, total income other than three types of income. Dividend, STCG on which STT is paid, LTCG on which STT is paid. How to compute surcharge? 25% on such total income, that is excluding these three, whatever I get 25% and 15% only for these three. Dividend, okay, 25 and 15, okay. Similarly, where the total income excluding dividend 111A, 112A exceeds 5 crores, 37% on such total income, and on these three, it continues to be 15%. Total income, including these two types, all these type of income is more than 2 crores, 15%. Yeah, what is that? What is the confusion? The last one, huh? What is the last one? That is, if you have 1 crore 80 lakhs of business income and 40 lakhs of STCG on which STT is paid, what is the surcharge? Including, okay, by including all these things, if it exceeds 2 crore. By excluding all these things, if it exceeds 2 crores, then it covers it. Same, yeah. Second one and the last one are the same. For firms, companies, only more than 1 crore. Okay, but today's our focus is on individuals. So let's me go on individuals. Cess is 4% and rebate. Rebate is for those low income earners whose total income does not exceed 5 lakhs. Whose total income does not exceed 5 lakhs, rebate is provided. And there also on the last point, I have said that rebate is not applicable for section 112A income. Okay. And of course, rebate will be actual tax or 12,500, whichever is less. What is the difference between rebate and relief? In the future, we are going to study something known as relief. Rebate is after tax before HEC. Relief is after providing H, after adding HEC also, if I get, that is what is known as relief. The following are the examples of an individual. In each of the cases, compute total tax payable by such individual. Assume that LTCG under 112A is after providing the initial exemption of 1 lakh. Okay. First one, example 1, dividend income 26 lakhs, business income 2 crore 40 lakhs. So it goes to, in our surcharge table, the third point, where excluding dividend income, STCG on which STT paid, LTCG on which STT is paid, the income has exceeded 2 crores. On such income, of course, on the tax only surcharge will be computed. On such a tax, 15%, 25% is going to be the surcharge. For dividend, it is going to be continued at 15%. That's what we are going to start working. Business income 2 crore 40 lakhs. Dividend income 26 lakhs. I hope base tax you are all comfortable in this. Otherwise, I will take some detail working also. 2 crore 66 lakhs minus 10 lakhs into 30% plus 1 lakh 12,500. Repeating, 2 crore 56 lakhs into 30%. For the first 10 lakhs, we all know it is 1 lakh 12,500. 2 crore 56 lakhs into 30%. For the dividend is also taxable at normal rates. It is not like STCG or LTCG, which is taxable at special rate. Dividend is also, only the surcharge is different. So my base tax comes to 77 lakh 92,500. I again tell you how I worked out. On the first 10 lakhs, I get 1 lakh 12,500. Up to 250 nil, next 12,500, next 1 lakh. Okay. On the balance at 30%. So 2 crore 56 lakhs into 30% plus 1 lakh 12,500. Add surcharge. For dividend, I am first working. We need to find out how much is the tax on dividend so that surcharge can be worked out for them. For dividend, the surcharge is only going to be 15%. How to find out what is the tax for dividend? It is on proportionate basis. It is on proportionate basis. 77 lakh 92,500 is for 2 crore 66 lakhs. Okay. What is for 26 lakhs? If I find that, on that I can apply 15%. That will be the surcharge for dividend. Repeating, for dividend, I need to find it out on proportionate basis. 77 lakh 92,500 is for a total income of 2 crore 66 lakhs. What is the tax for an income of 26 lakhs? I am getting tax as 7 lakh 61,673. On that, the surcharge as 1 lakh 14,251. On that, the surcharge as 1 lakh 14,251. Repeating, surcharge on dividend, that alone needs to be on proportionate basis. That alone needs to be on proportionate basis. Total tax divided by total income, which is taxable at normal rates, into dividend income will give me what is my dividend tax on that 15%. On the balance at 25%. What is the balance? 77 lakh 92,500 minus 7 lakh 61,673. On the balance 25%. Is this clear? Is this clear? Raja, you got it? You got it? Yeah. Yeah. Okay. Right. I'm going into example number STCG under section 111A 10 lakhs. LTCG under 112 is 5 lakhs. Business income 40 lakhs. Okay. They have said this is LTCG under 112. So it is 20%. Only 112A is 10%. This is okay. This is coming under the normal slab rates. Okay. So understand my computation here. Understand my computation here. It is 40 lakhs minus 10 lakhs. Okay. Into 30% plus 1,12,500. 30 lakhs into 30%. 30 lakhs into 30% plus 112,500. This is this is taxable at 15%. This is taxable at 20%. So 10 lakhs into 15%, 5 lakhs into 20%. We all know total income exceeds 50 lakhs. So base tax comes to 12 lakh 62,500. Total income has exceeded, my dear friends, 50 lakhs, and surcharge at the rate of 10%. Exceeded 50 lakhs but has not exceeded 1 crore. Exceeded 50 lakhs has not exceeded 1 crore. So into 10% and HEC at 4%. It is tax plus surcharge into 4%. Tax plus surcharge into 4%. No, I'll tell you marginally. I'll come to that. Closer to 50 lakhs now. 55 lakhs cover. அதுலயே அந்த ரெகுலர் கால்குலேட்டர் எடுத்துன்னு வந்துட்டா கொஞ்சம் பெட்டரா இருக்கும். ஆமா, நிஜமா. பேட்டரி இல்லையா? The biggest problem for you all is you have to convert from your Excel mode to physical working mode. Okay, yeah, because that is the challenge. You all these things are done by software, I believe, in your office. Suddenly there will be tax podungna, sir, on the software. Uh, Example number 3. STCG under 111A 24 lakhs, LTCG under 112A. This is after giving that 1 lakh relief. That is what the question in the beginning itself has said. Actually, it should have been 26 lakhs. 1 lakh is exempt, so taxable portion is 25 lakhs. Business income 3 crores. So, income other than excluding 111A and 112A has exceeded the 2 crores. For that income, it will be 25%. Okay. For these two things, it will be 15%. It will be 15%. Keep working. Online students also keep working. I'm stopping the presentation just to ensure that you work out and come out with the answer. I'm also going to parallelly work. Online students, you can WhatsApp me your answer. I'm getting the answer like this, my dear friends. On the business income of 3 crores, I'm getting a base tax of 88 lakh 12,500. How I get that is 2 crore 90 lakhs into 30% plus 112,500. 2 crore 90 lakhs into 30% plus 112,500. Yeah, you are right. No, there is a small mistake. We'll look into the answer. I'm just presenting the answer for my online students also. 2 crore 90 lakhs into 30% plus 112,500. So that comes to 88 lakh 12,500. STCG 15% of 24 lakhs. LTCG 10% of 25 lakhs. So my base tax comes to 94 22 500. 94 lakh 22,500. Surcharge on these two things, add up these two things, 360 plus 250. 360 plus 250 into 15%, and on the business income, business of a tax of 88 12 500, 25%. Finally, HEC. Any doubt, you can text me also if you are unable to ask it directly. Amam Sudha, you're right now. You're right. Those who have completed, go to example number 4. Those who have completed, go to exam number 4. Example number 4. Others can continue. Any doubt, you can ask me. And this is the I know almost all of you got the answers, but just for record sake, 6 crores is the business income on which we are getting a tax of 1 crore 78 12 500. How we got it? 5 crore 90 lakhs into 30% plus 112 500. On the 40 lakhs 15%. On the 55 lakhs 10%. You're not getting it. Yeah. So base tax is 1 crore 89 62 500. surcharge on 6 lakhs and 550, 11 lakh 50,000 into 15% on the business income at 37% HEC. I'm moving on to example number 5. STCG 40 lakhs, LTCG 50 lakhs, dividend income 35 lakhs, business income 2 crore 10 lakhs. One thing we have to remember is total income taxable at normal rates is 2 crore 45 lakhs. And then we have to do the proportionate for dividend surcharge. Okay. Total income taxable at normal rates is, my dear friends, 2 crore 45 lakhs. 210. This is also taxable at normal rates only. There is no special rates like STCGR. Only the surcharge is special. Only the surcharge is special. Otherwise, this is also taxable at normal rates. No, I'm just going to work 2 minutes. Yeah, whoever is answering me, I'll just complete it. I've just started the course solution. How much are you getting? A small mistake is there, Sarva. Small mistake. Yes. 61 lakh 39,286. Your total normal tax comes to 71,62,500, right? Dividend on which you will compute surcharge is coming to 1023,714, 214. Hilla Hemant, I think some small mistake is there. Some calculation error. You haven't added up something, I believe. You got it, Phil? Ananya, உங்களுக்கு வந்து the answer. Raja, you got it? So business and income taxable at normal rates 2 crore 45. 2 crore 35 lakhs into 30% plus 112,500. And then STCG, LTCG. Now on STCG and LTCG, directly we can work 15%. For dividend alone, we need to do some extra computation. For dividend alone, we need to do some extra computation. How to do that computation? 70 only normal rates you should take. 71, 62, 500 is for an income level of 2 crore 45 lakhs. What is for 35 lakhs? That is the dividend income. Correct, Sudha. So 10 to 23 to 14, it comes to proportionate tax, on which I will do a computation of 15%, and on the balance, it will be 25%. The answer should be on your screens also, online students. I don't think I stopped the presentation. Stuck ஆயிருக்கீங்களா? Okay. If anybody is still doing, I'll wait. Otherwise, I'm progressing. If you are doing, please don't hesitate to tell me. Even our online friends, you can just tell me, please wait, I will wait. Otherwise, I'm progressing. Now, example number 6, which also has one more issue aspect. STCG on sale of land is a normal rate taxation item. STCG on sale of land is a normal rate tax item. Remember that STCG on sale of land is a normal rate tax item. It does not have special rate. 111A is where security transaction, that is only for shares, business trust, etc. Others that doesn't apply. So this is normal rates of taxation. Start working. அப்புறம் கொஸ்டின்ல அனன்யா சூப்பர் சீனியர் சிட்டிசன் கொடுத்துருவேன். This is the answer I am getting. 248,5769. How I got it is income taxable at normal rates. I got 5 crore 80 lakhs, which is business income, STCG, dividend income. All three put together, I got 5 crore 80 lakhs. The tax will be 5 crore 70 lakhs into 30% plus 112,500. 5 crore 70 lakh into 30% plus 112,500 comes to 1 crore 72 lakh 12,500 and 50 lakhs into 10%, that is LTCG. Then on the LTCG at 15%, on LTCG at 15%, on dividend income 1 crore 77 lakh 12,500 divided by, should be 6 crore 30, sorry. Oh no, sorry, write down 5 crore 80 into 40 lakhs. I got 1187,069 as the dividend tax. On that again 15%. On the balance 37%. On the balance 37%. Yeah, okay, Sudha. So my final tax along with the HEC comes to 248,50769 approximately. You should round it off to 770. Okay. Anybody still doing? I'll wait. Actually, if you look at it, if you technically look at it, uh, he, I think they are paying tax to the extent of 40%. They are paying tax to the extent of their total tax comes to the extent of 40%, which is too high for a developing economy. Okay, if they go and after paying all these things, if they go and buy a car, they have to pay another 28%. Who is not a businessman? Suppose business at least input credit, etc. They'll get. Who is the okay? So I don't know. Somewhere we are wrongly understanding Adam Smith technology of taxing the rich. Though okay, 5 crores seems to be a large number, but there are many who are traveling towards that level. So taxing, too much of taxing. Alkiwala used to say that we should go and tell the government, you keep the income, we'll keep the tax, which will be higher. Okay, now, okay, so those who are in from inter classroom are familiar with this. Always the last question is the liver question. Okay, last question of the chapter. Okay, this question is specially designed to help us understand marginal relief. Okay, the questions are specially designed. So let's do one question to understand it. Okay, after understanding, let's go and read the theory. That will be better. Okay, total income, okay, is 51 lakhs. In the first example, I am taking a total income of 51 lakhs. Okay, base tax as usual 51 lakh minus 10 lakhs into 30% plus 1 lakh 12,500. Base tax works to okay 1342500 and surcharge at the rate of 10% because 51 lakhs surcharge at the rate of 10%. Okay, 1 lakh 34,250. This is the point that will trigger marginal relief is there. The income exceeding non-marginal, non-surcharge level. Up to 50 lakhs, no surcharge. Up to 50 lakhs, no surcharge. My income goes up by just 1 lakh, but my surcharge is 1 lakh 34,250. My income just goes up by 1 lakh. My surcharge goes up by more than the income increase. So marginal relief becomes a concept. How to compute marginal relief? Please wait. Okay, so this comes to, okay, please understand, then we can take down. Had the income been just 50 lakhs, had the income been just 50 lakhs for this assessee, the base tax would have been 40 lakhs into 30% plus 112,500. 40 lakhs into 30% plus 112,500, and he would not have paid any surcharge. Okay, surcharge would have been nil. So his total tax would have been only this much. The difference in income, the difference in taxes is 164,250, whereas the difference in income is 1 lakh. For earning extra 1 lakh, he is paying additionally 1 lakh 64,250. So came the concept of less marginal relief, okay, nothing but 164,250 minus 1 lakh is given as a relief to him. Okay, is given as a relief to him. Okay, the difference, okay, for a minute, if we go to the theory and understand it, the purpose is to ensure that the increase in tax due to surcharge is not more than the increase in income from the non-surcharge level, 50 lakhs, or previous surcharge level, 1 crore, 50 lakhs to 1 crore, 10%. So more than 1 crore, it goes to 15%. More than 2 crores, it goes to 25%. So previous level or not level. So to neutralize only at the surcharge level, not even at the HEC level. He's still paying a more tax, but only at surcharge level, this neutralization is achieved. So they provide something like marginal relief. And after that, add HEC. Am I clear to you? Okay. Please understand 51 lakh. My trigger point of surcharge, marginal relief is when I compute the surcharge that exceeds the income difference. So that is the point I understand where surcharge should be applicable. When will I know marginal relief has to be worked out? When I computed the surcharge at 10%, 134 to 50. That is exceeds 1 lakh because the increase 50 to 51 is only 1 lakh, but whereas it exceeds, so it triggered to me that I have to compute marginal. Shall we? If you look at the next case, shall I? Shall I? The next case says total income is 1 crore 1 lakh. 1 crore 1 lakh. Total income is 1 crore 1 lakh. The surcharge becomes 15%. Had it been just 1 crore, the surcharge would have been only 10%. The surcharge would have been only 10%. Sorry, friends. So 1 crore 1 lakh, you will get a marginal relief of 75,125. Difference in, because the previous level is 1 crore. You can try 1 crore 1 lakh 50,000. You will get a smaller level of surcharge. I don't want to waste your time. Somewhere around 1 crore 2 lakhs 2 lakh 50, with that it will stop. It will be very clear in your examination that they are asking for a marginal relief question. It will be very clear in your examination, don't worry. So we stop here today. Tomorrow, our focus is on PGBP, starting with section 28. We would have traveled to a little extent on depreciation tomorrow. Uh, we would have started discussing more on depreciation, etc. tomorrow. Meet you 6 a.m. in the same room tomorrow. And for those who are there in online, 6 a.m. tomorrow morning, we'll continue with depreciation. We are going to start with PGBP and travel to a little extent into depreciation. Depreciation is a longer concept. Meet you again tomorrow, friends. All the very best.